If you want to get good at something, you're probably going to have to make a lot of mistakes along the way, and investing is no different. The problem is, I feel like in the investing world, you often get left completely alone and told just to do your own research and make your own mind up. This means that investors, especially in the beginning, make the same mistakes over and over again, and I was definitely no different. And that's why in this video, I want to take you through all the common mistakes and traps that investors fall into, and this is all from my own personal experience over the last decade. So in no particular order, let's get started. This seems obvious now to me, but when I first started, I had no idea at all about the different kinds of accounts that you could open as an investor, and it looked really complicated trying to get started. I was worried that if I chose the wrong one, I would cost myself money or not be able to get my money out. Funny enough, I remember thinking that a stocks and shares ISA, which is a tax-protected investing account here in the UK, would somehow mean that my money would get locked away and I'd not be able to actually access it. Now, other countries have different kinds of accounts, so don't worry too much if you're not from the UK, but the same concepts apply here. I never realised just how important it would be to use a tax-advantaged account like my stocks and shares ISA, and I bet that most people in the UK don't even really know about them enough. Now, I'm not going to go into all of the details here, but as a starting point, just remember that inside your stocks and shares ISA, you're able to protect all of your investments from capital gains tax and other kinds of tax like dividend tax. So for example, let's say that you invest every single month inside of a stocks and shares ISA. Now, it doesn't matter what you're invested in, it could be mutual funds, ETFs, or even individual stocks and shares. When it comes to selling these investments after many years, you could be looking at some big profits. Now, in a normal trading account, you'd be liable to pay taxes on anything above and beyond those allowances that you get as an individual. Knowing that everything is tax-free is such a massive benefit, and not every country is as generous as we have here in the UK, so just make the most of it. And think about this, imagine after decades of investing, you could be sat on hundreds of thousands of pounds inside of your ISA, and all of those lovely gains are completely tax-free. Honestly, if I knew this at the start of my journey, everything would be inside of a stocks and shares ISA just to keep things really simple. So that's lesson one. Don't forget to use any tax advantage accounts, whatever you have access to, and I've got loads of videos on my channel for beginners too, if you want to find out some more details later. Don't forget as well that if you want to open any accounts, I've always got the latest offers from my preferred platforms in the description below. Okay, this can't have just been me, but when I thought about investing, all I pictured was some kind of scene from The Wolf of Wall Street or movies like Wall Street. Fancy suits, lots of yelling and constantly trading back and forth on stuff to make a profit. I definitely mixed up investing and trading and assumed that to be a good investor, you need to constantly buy and sell things and be some kind of genius to make money. I can't remember if this was actually my first investment or not, but I did manage to open up an account with a trading platform thinking I was going to be some big shot, and I started looking into trading Forex and even betting on the moves of the market using options, or as they're called in the UK, CFDs. Thinking about this now, I actually want to slap myself in the face with a wet fish, because trying to make money like this is not investing at all. And it's really a losing game, or at least for the majority of people it is. The only winners in the trading world are the platforms that take a ton of commissions and convince mostly young men to throw all of their money away and gamble with the promise they could somehow get rich quick. Investing is a long-term game where we can all win over the long run as the value of our investments grow because the market gets bigger, companies make more profits, and the quality of the businesses improves too. Trading, on the other hand, is a short-term game. It's as close to gambling as you can get, and nobody can predict with any kind of certainty what will happen to stock prices and foreign exchange rates. It's no surprise that so many people want to sell you courses on this stuff, even though they claim to make loads of money from trading. It's much more profitable, it seems, to sell you a course and actually make money day trading or constantly buying and selling stocks. Stick to long-term investing, which means buying regularly over many years to meet whatever goals that you have. Just ignore the noise of the traders because most of them are losing money. Okay, this one I think we're all guilty of, and we probably have to make the mistake ourselves, because no matter how many times we're told that we can't time the market, let's be honest, we all still do try from time to time. A few years ago, I sold out of all my investments in one go because I was worried that the market was going to go down. I assumed that I would just wait in cash and then get back in when things were looking better, and then I'd save myself loads of money, and I even did the same back in 2020 as well as through the pandemic. The problem is, every time you sell out of the market, you then put yourself in a difficult position. You have to somehow magically know when the bottom is and buy back in just at the right time. In hindsight, this way of thinking is just so stupid. Again, I'd love to slap myself with a wet fish. If you ever listen to the greatest investors, they will all tell you the same thing over and over again. You cannot time the market, and nobody can consistently. Sure, you can get lucky a couple of times, and sometimes you only need a bit of luck to do well for the rest of your whole investing career, but it's just not worth it. For most of us, investing isn't a one-time event, and we get loads of chances to keep investing throughout our lives. Constantly selling all out at once and buying back in again will cause you more mental pain and torture, and will end up costing you money with commissions and fees. Now, I'm not saying that the price doesn't matter and that you should never sell, especially when it comes to those of you who want to buy individual stocks. Prices really do matter. But trying to buy right at the bottom and then sell right at the top each time, it just isn't going to happen. Take a leaf out of Warren Buffett's book and only buy something if you're really committed to holding it for the long term. And pretend you've only got a few investments you're allowed to make during your life. Then you'll really do your research. Or one step better, this next mistake might be one of the single most important things you need to learn. But just before that, if you are enjoying the video, please do me a huge favor, hit the like button and subscribe. It does really help out small channels like mine get to more people like you. And now that that's done, let's get to number 4. Okay, this is another confession and probably one that you can relate to as well. Because I thought investing was more like trading and constantly buying things back and forth, I never knew that you could just invest in the whole stock market. I assumed that the only way to invest would be to be some genius stock picker or just pay someone else to do it for you through some kind of mutual fund. The thing is, it's no surprise when you think about it. It's not like index funds get advertised on TV or they're thrown at you all the time, because in reality, they don't really bring in the profits like the other expensive funds. And for most people, they just don't get you excited enough. I mean, comparing an index fund to stocks like Tesla over the past couple of years would be like comparing a Big Mac burger with a Michelin-starred restaurant dinner. However, index funds are so important for investors like us, and I really wish I'd known about them when I started my own journey. I had no idea that you could just invest in the whole market at once, save myself loads of effort and save myself a ton of money too in the long run through costs. They've been around for a few decades now, and I think it's fair to say that they've completely changed the game for investors. And it's no surprise that they've become really, really popular. The stats speak for themselves, so over the long term, you're much better off just investing into a broad index fund than trying to pick your own stocks, because it's a lot harder than you think. You can always have a great year and even do well over a few years in a row with some great companies, but in the long run, almost everyone who does it fails to beat the market, and the numbers don't lie. If I was starting out again, I'd make sure that the majority of my investments went into low-cost index funds, something like either a track S&P 500 fund or even a global index fund that invests in thousands of companies all around the world. I'd still want to have some fun and invest in some individual companies, but I really wish I'd started with index funds first. It's so simple, and even some of the best investors in the world recommend them. Even Warren Buffett keeps on telling people time and time again that they should stick to index funds, because unless you want to spend hours and hours looking into the financial statements of companies and doing all of your own research, most people still end up performing worse than the index. Now, I've done loads of videos about them on my channel, so don't forget to check out all of my playlists on investing for beginners. Now, this topic is one of my favourites to talk about and actually leads on quite nicely from talking about index funds. I really wish I'd known how important fees and charges were to investing and what effect it can have in the long run on the money that you actually end up with. The best way to think about fees and charges is like this. Imagine that you're running a business. It's really simple. Let's say that you build furniture and you sell them to customers nearby. You sell your wooden tables for £1,000 each, so that would be your revenue. In total, let's keep it simple and say that in a year you sell 50 tables. So your small company has a revenue of £50,000. Now, you don't get to keep all of that money because you've got to take off all of your costs to actually work out what you really get to keep in your pocket. Let's say it costs you £500 to make a table, so that leaves you with £500 of profit for yourself. In 1 year, that means that you make £25,000. Now, let's compare that to the stock market and investing fees. If the value of the overall stock market in 1 year increases by £1 million, then you'd expect that the value of your shares would increase by your share of that £1 million. But in reality, you have to remove the costs and charges to get the true amount returned back to you. Pretty much in the same way as if you have to remove your costs if you're running your own business. To improve your returns, we want to keep costs as low as possible. And when I started out investing, I never really paid attention to the fees because they looked so small and the amounts were just little percentages or small amounts of money. But I never really understood how they could add up over time. And remember that there's a huge industry out there designed to take as much money from you as possible in fees. They don't care about how much you make, they just want to line their own pockets. So be really careful out there when deciding on what to invest in and where to invest. The lower you can keep your costs, the more profit you can make. So in the example of the stock market, if you can reduce your fees from 2% to 1%, well, that will mean a huge amount of money in the long run over many years. And if we go back to the business example, let's say that you can somehow reduce your cost to run that business of selling the wooden furniture. If you can reduce your costs by 10% a year, you go from making £25,000 to £35,000, which is an increase of 40%. So just think of your investments like your own small business. Keep those costs low and you'll get a lot more back in the long run. This lesson, I think, is another one that every investor has to learn themselves in their own way. Without fail, every year there'll always be people promising you ways to get rich quickly, and somehow all of this will come with very little work. It's pretty much what we all want, a lottery ticket to life where we can just get money without putting in the hard work. Over the last couple of years, we've had a really crazy stock market with lots of company share prices rising many times over, creating lots of wealthy people. The thing is, for every one person who becomes a millionaire making a single bet on a stock, there's thousands and probably, if not millions of others who lose money or just chase after the same success that that one single person's had. Real investing takes a lot of time to make serious money, and the only way to make a lot of money is to invest a lot of money and then keep doing it for a long period of time. In truth, investing is pretty boring and there's no shortcut to being wealthy from investing. If we use our favourite example, good old Warren Buffett again, you can see that his wealth has taken a huge amount of time to actually really build up, and most of his massive gains have only really come in the last few years. So, sorry to break the bad news for you, but you're not going to become a millionaire overnight. This is going to take time, and quite a lot of it. Investing is the ultimate delayed gratification. It's also why most people won't stick with it and they sell out too soon. It goes back to the famous saying that time in the market beats timing the market. And although we can never know the future, there's never been a 20-year stretch in the stock market where you would have lost money, and that's going all in at once. If you do invest regularly instead and do it over many years, you'll likely do very well. But saying you're going to do it and actually doing it are two very different things. So let's do this thing together and see where it takes us. Alright, one final point here. It leads on nicely from the last one. There's always going to be a stock that gets all in the news and all of the attention, and even outside of the stock market, there's always going to be some kind of thing promising to make you rich, whether it's easy money in crypto or NFTs or meme stocks. Just like when I first started investing, I was sucked into the idea that I'd somehow trade my way back and forth into becoming rich. But the reality is almost always the opposite, and there ends up just a few winners and many, many losers. And the problem is the winners get all the attention and then they get all the glory, and they claim to know something that you don't, and you'd better copy them, otherwise you'll get left behind. Now, unfortunately, YouTube is covered with these kind of people who don't care about you, and all they care about is themselves, claiming to know what stocks to buy, which company's about to 100x over the next few years. In reality, they haven't got a clue, and nobody does. So from my opinion, just stay as far away as you can from anyone who claims to know the future and claims to have any kind of certainty about a world which is pretty uncertain. Unfortunately, the most ignorant people in the world are the ones who tend to speak with the most certainty, whereas those people who are the smartest tend to be a bit more critical, and then they doubt themselves a lot. So don't get sucked into the hype, stick with your own plan and keep investing through the good times and especially the bad times, like now. It's going to be a long road, but it will be worth it in the end. Otherwise, if it isn't, then we can at least say we gave it a good shot. Now, don't forget to watch this next video. If you want some more tips, but this time, rather than just from me, why not listen to the world's greatest investors like Warren Buffett and Peter Lynch? Drop me a like on the way out, subscribe for more, and as always, happy investing.